Emmanuel, you have a scenario of weaker for longer commodity prices, which of course feeds through to a view on the platinum group metals stocks that a 20% consensus Ebitda downgrade could be in the offing. Can you explain a little bit of your thinking here?
Yeah, sure. Hi, Rod. If you look at 2023, and if we just look back for a bit, it has been a real challenging year for the PGM, the platinum group metals, that being platinum, palladium, and rhodium. We've seen platinum fall just over about 10% year to date. Palladium is over 40% down, while rhodium is over about 60% down. So looking at all these factors, and if we look into next year, it's not really much upside we see for palladium and rhodium prices in particular. On platinum side, well, those prospects do look a lot better than palladium and rhodium. When I'm talking about prospects, we really look at the market balance. So platinum likely to be in deficit this year, stay in deficit through till the end of the decade. Palladium, rhodium, both are likely shifting to surpluses as we go on, and we see that coming on probably about 2025. So factoring that all in, and if we price that into these commodities, consensus does look a little bit too optimistic in our eyes. Under spot price scenario, that downgrade could be greater than the 20%, which is our scenario, and that could get up to about 27%.
Wow. Okay. And then looking at it from another way, tighter emission standards seem to be a little bit of an underlying theme to the PGM complex. How will this theme influence, say, supply demand and that picture over the next couple of years?
Sure. So essentially, if we're looking at the tight emission story, so we've got to understand that palladium and rhodium are both 90% of their demand comes from the auto vehicles. Except when platinum, its demand, end user demand, is only about 40%. So your traditional internal combustion engines play a big part in the demand for palladium and rhodium. So as that demand starts to slow, which we've seen happen this year, and as electric vehicles continue to penetrate into the market, they're losing much of that demand picture, and that's what's really pushing them into a surplus. Platinum, why it's more favorable, or its future might be more favorable, is that, like I mentioned before, its end user demand from the auto sector is only about 40%. So that industrial demand, as well as the investment demand, has more of a pull factor on that and can support it as less of the metal gets used in the AutoCAD vehicles.
And then the last question, and really for a guide rail for our listeners, what kind of catalysts should they be keeping an eye on?
It's all about looking at the miners' results come end of the year. So we've got most of them reporting the full year results, as well as updates on the strategic planning in terms of, hey, we're looking at our mines, and this is how we're the mine plans or life of mine plans. One thing we have said is just given how low the PGM prices are, all of them could be at risk of having to shut some of their more costly mines down. So that's one update we'll be looking out for. The macro picture, auto sales have been quite weak or weaker than expected. Keeping an eye on that and keeping an eye on the economy to see whether any recovery comes into play as another thing we'll be watching quite closely for.
Emmanuel, fantastic. Thanks very much. We'll keep an eye on those. Thanks for your time.
Thank you.